Are you going to itemize your taxes this year? If so, make sure that you optimize so that you take full advantage of the new state and local SALT cap deduction. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Apparently only about 10% of taxpayers itemize their taxes these days. When they increased that standard deduction and doubled it a few years ago in the Tax Cut and Jobs Act, that meant, I think the intention was to simplify the tax preparation process. Absolutely failed. It did not do that, but it did cause fewer people to itemize. Well, one of those limitations has just changed. Within the itemized deduction, within the different categories of things that you get to add up and potentially deduct, your state and local taxes. So state taxes, local taxes, property taxes. There's a section there within that itemized deductions where you get to add up your state and local and your property taxes that you paid and excise taxes as well. And that counts towards that itemized deduction, that total. Well, big controversy, especially if you're in a high tax state or pay a lot of property taxes, is back in 2017 with the Tax Cut and Jobs Act, they capped how much of those state and local and property taxes that are allowed to help you on that itemized deduction. They put the limit at 10 grand. So if you were paying $20,000 in state and local taxes and property taxes, you only got $10,000 counted towards your standard deduction. So there again, a lot fewer people itemized. Well, in the new tax laws starting in effect this year, right now, they've raised that cap from $10,000 to $40,000 as long as your income is below certain thresholds. If you are near those thresholds and you're paying high state and local taxes, property taxes, likely those two go hand in hand. Make sure you're doing proactive planning with your certified financial planner to stay below those thresholds if you can, so that you can get the full benefit from this new SALT cap. With moving that threshold, that cap from $10,000 to $40,000, more people are going to itemize. More people will. And I don't know if that number is going to go from, well, 10% are itemized right now. It's now going to be 15% or now going to be 20%. The question is, are you going to itemize? And if so, you need to start planning right now and planning to optimize that SALT cap limit. Here's the situation. Recently working with some folks some clients that do pay a lot of property taxes and a lot of state taxes, somewhere around $30,000 or so on a typical year. Well, in this particular year, we know there's going to be more dividends, there's going to be more capital gains, there's going to be more income landing on their tax return that doesn't have a lot of withholdings with it or any withholdings with it as well. They also have some self-employment income landing on their tax return as well. And so there's going to be more income, and therefore likely this year more state and local taxes than they paid in previous years. They also have high property taxes as well. So when we do the math, it's very possible they're going to, when it all adds up, get above $40,000 in total state taxes, local taxes, property taxes, excise taxes. So going to be above $40,000. Well, here's the situation. Just based on what they're currently withholding for state and local taxes, as well as what they're paying in property taxes, right now we did the math and it's going to land around $30,000. So it's projected, we're projecting that they're going to owe, when it comes time to file their taxes next spring, they're going to owe state taxes. And not a problem. We've met the safe harbor, and as long as that's not a surprise, if you're planning ahead, and as long as it's not a surprise, it's okay. You've kept more money in your pocket earning interest for you as opposed to sending it to Uncle Sam. Here's the problem though. If you pay it when your taxes are due, when you file your taxes out in the spring, that means you only paid $30,000, let's just say for round numbers, in state, local, and property taxes during the calendar year 2025, and you paid the rest of it during calendar year 2026. You didn't optimize for this new $40,000 SALT cap deductions, part of your itemized deductions. So this presents a planning opportunity. How do we optimize this for this year in 2025, knowing that they're going to itemize their taxes? Well, we're going to pay in that extra $10,000, and we're either going to do it through a a tax estimate here in the third quarter by September 15 or in the fourth quarter, depending on when that income comes due. Fourth quarter estimates are due by January 15. We'll want to pay it this calendar year, or by doing a special withholding strategy that we've talked about here on the Wise Money Show before, a 60-day withholding strategy, but getting that payment to the state, an extra $10,000 made in withholding payments or estimated payments to the state in 2025, so that when we go to tabulate and calculate their state and local taxes that they've paid in, yep, their property taxes are going to be one thing, but the amount of state and local taxes that they've paid in through estimates or withholdings, we're going to make sure we get that to $40,000, so that when we do itemize, they're going to optimize and maximize this new tax limit. Does that apply to you? Do you have capital gains? Do you have dividends? Do you have a lot of interest landing on your tax return? Maybe self-employment income, maybe some rental income that doesn't have withholdings applied to it. And you are either just doing tax estimates or managing your taxes in another way to make sure that you avoid tax surprises and capture all the opportunities. But it presents an opportunity this year for you to pay in extra to the state to ensure that you're covered and to make sure that you optimize this new state and local tax, the SALT cap. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.